Hi, we appreciate your time today and thank you for joining us. My name is Sean Cohen, and I'm excited to introduce you to an extraordinary investment opportunity, the RIZE Equity Growth Market Fund. Over the next 10 minutes, we'll provide a comprehensive overview of the fund. We'll dive into the exceptional team, the thriving real estate market that we're capitalizing on, and the impressive projected returns we've anticipated. Most importantly, we'll talk about why the RIZE Equity Growth Market Fund should be your next investment choice. But first, let's begin by introducing the team behind this fund. Our seasoned investment professionals have decades of combined experience in multifamily real estate, finance, and asset management. Each team member brings a unique skill set and perspective, fueling our creative problem-solving approach and driving us to succeed. Starting from right to left, we have Matt Shambeau. He's our Director of Asset Management for RIZE Equity. He controls, directs, and develops multiple projects at once. Garrett McIntyre is the Head of Acquisitions, where he is responsible for leading the company's business acquisition efforts by developing relationships with owners, brokers, and other sponsors to identify and acquire properties that meet our objectives for economics and underwriting. And I am Sean Cohen, a 19-and-a-half-year military veteran. As RIZE Equity's Director of Business Operations, I really enjoy the opportunity to build and manage the systems and teams needed to advance RIZE's objectives. However, one of those objectives is to help solve the trilemma that investors often face. That is, navigating an unpredictable stock market, mitigating the risk of inflation, and finding the time and means to actively manage and scale their investment portfolio. So what's needed, in our opinion, is an investment strategy that offers solid returns, provides true diversification, can be scaled to match your individual financial goals, and requires minimal active investment, all in an environment of market volatility and inflation. We believe our fund helps solve these problems. But why should you consider this fund? Well, let's talk about that. There are several reasons to consider this fund. Today, the fund projects 17 to 20% average annual return, a 15 to 17% annual or internal rate of return, and somewhere between a 1.9 to a 2.1 equity multiple, all based upon how much you invest. Furthermore, something that's really unique about the fund is that RIZE will be replacing all of their co-GP and promote that it receives from any opportunity back into the fund, which will add an additional 8 to 12% equity. What should be noted, though, is that these numbers reflect the current return profile today with 2 deals invested in, and as the fund invests in more deals, the potential for these returns to increase is there. Furthermore, a fund offers instant diversity. Just like a mutual fund, a real estate fund invests in multiple properties across different markets, different assets types, what gives you that instant diversity. Additionally, you'll receive passive income with the ability to create wealth, right? So you get quarterly distributions with a decent return on the disposition of properties, giving you both a return on your capital and a return of your capital when we disposition those properties. Finally, our fund will allow for better terms than if you were to invest in these deals as an individual on your own. So now what I'd like to do is hand it over to Matt, who will help you understand our investment approach for the fund. Matt?
Thanks, John. So our approach is to focus on value-add real estate assets, primarily multifamily, A, B, and C class multifamily assets, and growth markets across the Sun Belt, which you can see highlighted in the map here. The reason we love multifamily is primarily due to cash flow and the ability to force appreciation. In addition to that, there's huge tax advantages, and there's just a economic resilience with this asset class. And so the first step is basically to take a systems-based approach for focusing on the demographics and key market indicators to identify the target areas for investment. Then we'll take a conservative underwriting model and stress test the deal for different types of economic conditions. Then we're going to take a deep dive into the property and really get into the due diligence, do site visits, analyze the debt, professional reports, and rely on our education and our past experiences to mitigate the risk and ensure strong returns for all the deals put into the RIZE fund. And lastly, we're going to partner with experienced operators, those with strong track records who are experts in their asset classes to purchase, optimize, manage, and sell cash producing assets. Go ahead to the next slide, Sean. So when I say growth market indicators, the most important one is population growth. And when I say key market indicators, the most important one is population growth. And we're looking for at least a 1% increase year over year. And that kind of indicates a positive net migration. So if you look at the map, you'll see orange dots in California, in New York, New Jersey, and these are representatives of areas with a net negative migration. So people are leaving those states due to higher cost of living and other reasons, and they're migrating to the blue dots that you can see. And you see two red circles that are here, and that is where two of the assets that we're actually investing with the fund are located, Northwest Arkansas and Atlanta. And the reason why you care so much about population growth is it drives demand as well as it drives down vacancy. And those two things combined drive rental growth, which increases your revenue for the property and makes them perform better. And then that's kind of our ability to force the appreciation. The other big driver is your economic diversity and just job growth. So you think Northwest Arkansas, what's in Northwest Arkansas? Well, you have Walmart, and they're building their campus there, which is going to bring 16,000 jobs to that market. In addition, you have Tyson, you have JB Hunt that is there as well. So these things give you some economic diversity as well as a lot of job growth in those markets, which make them optimal for investing in. A few other things we looked at are your household income growth, reducing crime rate, as well as you want landlord and business friendly states. Obviously, landlord friendly, if we need to evict somebody out because they're not paying rent, we need the ability to do that. And these states offer that ability. So by focusing on these growth markets and relying on our systems and our teams, we're able to bring low risk opportunities with strong returns to our investors into this fund. So I'm going to turn it over to Garrett. He'll talk a little bit about the fund classes.
Thanks, Matt. All right. So here's a breakdown of the different classes that you can invest into our fund. I'm going to primarily focus on the Class C and the Class D because those are the classes that are available all the way through September 30th. And what we've done is we've incentivized an early investment into the fund by increasing our hurdle split after the pref return. So if you'll kind of stay with me, let's start with the Class D. So this would be a 50,000 minimum investment. We're offering a 8% preferred return, which basically means that the first 8% of net cash flows will go to you before anybody else gets paid, or go to the investor, I should say. After the 8% pref, it's then a 75-25 split. So that's 75% of net cash flows to the investor, 25% to the fund managers, which is us, RIZE. And then what we've done is to really incentivize and align with our investors, we've created an 18% IRR hurdle, meaning that, us as the fund managers, our group RIZE, we don't really start getting paid until we get our investors an 18% IRR, which is very challenging. We're hoping that we will hit this 18% IRR, but we're basically not really getting a payday for us until our investors are paid at least 18% IRR. So strong returns for the investors. You will notice that the Class C shares are $500,000 shares. These are for our fund managers or some of our larger investors. They do get a 10% pref, and there's a better pre-hurdle split. So they get an 85-15 pre-hurdle split. Another note here is that investors do have the ability to group together and create an LLC or an entity to invest if they wanted to hit that Class C fund. Let's just call it two investors that create one LLC and each want to invest $250,000. That's one way for them to get into the Class C units. So now I'm going to go ahead and sort of go into the projected returns of the deal. So a couple things that are important to note here. So these returns are based on the 2 deals that we are already invested in. So these are projected returns of the 2 seed deals, both the Watercolors deal and the Park Valley deal. Another thing to note here is that these returns are net of any fees for the fund or any asset management fees. So these are true net returns to the investors. So I'll sort of walk you through. This is a Class D share investment of $100,000. You can see that for the first 4 years, there's pretty decent cash flow. It's hard to find cash flow in today's interest rates environments. So for a fund like this that's diversified into A and B class apartments, this is pretty strong cash flow. What you will also notice is the big payday in our fund is projected in year 5. And the way that breaks down is that in year 5, some of these assets, and this could happen between year 3 and year 5, that they will have a sale or some sort of disposition. When they do that, you can expect a large return of capital. So it will be your entire initial investment return and then the equity upside. So in the case here, you see $171,000 returned in year 5. That's typically how these multifamily assets are exited. They're exited somewhere around year 3 and year 5, and that's where the big payday comes. All in all, these are sort of your projected returns. So we're projecting a 50% IRR, an 18% average annual return, and almost a 2x multiple in 5 years. Pretty standard returns in the multifamily industry. One thing I do want to note is that, for the example of the Watercolors deal, which is the deal in Northwest Arkansas, through June, I just took a look at the financials, and they are actually beating their projected returns by about 10% in the first year. So again, these are projections, but we do feel these are conservative and that we will outperform these numbers. One more note, that this share class, the Class D share class, is available through September 30th. After September 30th, it will go to the A and B class investments. And that's it. I'll turn it over to Sean on how we can invest into the fund.
Yeah, so if you guys are really interested in investing in a fund, or at least just learning more information about it, we have put all the information for underwriting, for everything else, for your review, so you can do due diligence on our fund, on the deals that we're invested in, just so that you can go through and make sure that this is the right investment for you. If it is, make sure to go to our RIZE Equity Investor Portal. You can get there on our site. Look at the top right, you'll see Investor Portal. Click on the link there, and you can sign up for a free, no obligation account there. Once you've created your profile, you'll be able to see everything on there, any sort of offerings that we have. You can look and go directly to the RIZE Equity Growth Market Fund, look at the OM and everything there. That'll be a little bit more robust than what you see here. It's a 70 page or 70 slide presentation that'll give you a lot more information than what you're getting on this brief kind of overview. Once you do that and you decide to invest, make sure to select the class that you want to invest, your amount, e-sign the subscription on the PPM, and then follow the wiring instructions, and then we're off to the races. So why invest now? I think this is kind of important. If you're a high earning professional or recently come into a substantial sum of money, it's crucial to make your capital work for you, not you for your capital. And real estate investments like this fund can really help you achieve your financial freedom, allowing you to do the things you truly love, right? Give you that financial freedom. It offers you the power to double your investment every 5 years, provides a steady stream of passive income, but also presents unique opportunities to retire young and grow your wealth and have it be generational beyond just you. It also acts as a robust hedge against inflation. Investing in the RIZE Growth Market Real Estate Fund can really help you secure your future while enjoying the present. So finally, I'd like to end with a contact slide. So just to wrap all this up, the RIZE Equity Growth Market Fund stands as a potential solution to today's economic challenges. Like I said before, with our experienced team, our strategic approach, and our focus on the resilience of multifamily real estate, we're offering a unique opportunity for you to realize a solid return while being able to diversify your portfolio outside of the stock market and scale your investment efficiently. Investing with us means stepping into the world where your money starts working for you and you're not working for it, where your financial growth is not hindered by market unpredictability, inflation, or the constraints of time or lack thereof. So join us in this exciting venture and experience the benefit of passive income or passive investing in real estate, enjoying that passive income. Secure your future, build your wealth, and let us guide you on this prosperous journey of investing. Thank you for your time today, and we look forward to growing together and rising with RIZE Equities Growth Market Fund. Thank you.